Hey everyone, it's Evan here from the Trade Risk on Friday, February 24th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some sector analysis. And don't forget, if you guys like these videos, if you watch every week, please do subscribe to our channel, bottom right hand corner. Simply keeps you up to date with all of the latest that we push out here on our YouTube channel. So let's get into markets here. I think it's going to be a fairly quick video because there's just not a whole lot of new information to say. We did our latest midweek video on Wednesday, and really price hasn't gone anywhere since that point. And a lot of the same facts that we talked about kind of hold true in the same levels to pay attention to. There are a few things, subtle things I want to point out here. With the S&P 500, we continue, look, we closed the week right at highs. If we go to the weekly chart, you can see finished up 71 basis points on the week, virtually at the highs, and you can see continue to just see acceleration higher here on this longer term time frame. Now, if you were to throw Bollinger Bands on here, we're just very calmly, cleanly, and bullishly riding the upper Bollinger Band higher. So yes, we are a bit stretched, but again, those overbought conditions are what you see in certainly the strongest of markets and trends. So back to the daily time frame, we spoke here on Wednesdays when we did our last video update, and we noted the inside day that we got printed here on Wednesday. We're very curious to see how that resolved. So Thursday, we had a gap higher with an immediate failure to hold on to those highs. So usually an inside day, when you get that move outside of it, you look for continuation in that direction. We saw immediate failure, went red on the day, came all the way back down sub 236 down here before we found some buyers, and we closed off the lows and positive on the day, but still down from those highs. Friday, the exact opposite, with a gap lower and then a rally for the entire day to close at the highs of the week at the top end of this range. So what we have now is this little mini range that we're starting to carve out right in here at these lows from Friday and at the highs from Thursday. So there's your very tight range, coincides with the very low VIX that we see here. So not much movement at all. You have this little micro level down here, call it 235, and then you have the highs up here at 237. So about a 2-point range, give or take, is sort of the playground here that we can dance around in and see some two-way trading kind of develop, maybe work off some overbought conditions and continue to sort of move sideways. Otherwise, the trend obviously remains higher. The 8-period moving average now has caught up with price. You can see it's right underneath today's candle. So we are starting to, we move sideways enough that some of these fast-moving averages are catching up. Bulls have the trend. If we see just continuation from this strong close next week, then obviously, the merry-go-round continues to the upside, and until the sellers can get us below 235, I think that would be your first signal at this point that something's changing. But at this point, we really don't see a tremendous amount of selling pressure at all. Now, will point out that we did see some rattle here on Thursday. Now, this day, again, we spoke about this on Wednesday, this, the masking of what the major averages do. There was actually a good amount of selling pressure on Thursday, particularly in anything with some volatility, with any type of beta to it. Things were getting sold off on Thursday. It didn't look so bad on the S&P because we had healthcare, we had energy, we had utilities and staples all rallying strongly on Thursday. But if you take out all those safety sectors, you actually had a lot of damage. And if we go to the IWM, a lot of damage is again very relative to the times that we're in, but you can see how wide of a range Thursday's candle was here, looking at the small caps, the more volatile, higher beta names. So that goes about what we talked in last week's video. The last couple of videos is about the S&P 500 playing a wonderful game of rotation and masking sort of what's going on under the hood of some of these different sectors. So all said, S&P 500 remains in overbought conditions, remains in a strong uptrend, Haven't seen substantial enough selling yet. Buyers did still step in here on Thursday, even though they did kind of rattle the cage a little bit. And bulls at this point still have the ball, even though we do see a little bit of near-term two-way trading. So that's the way we're looking at it, keeping things very simple. Still want to stay with the trend. As far as how we're playing it, we're still long. This was a tough week for us. I don't know if anybody else had some difficulty out there, but we got stopped out of a lot of things and just kind of whipped around. So glad this week's over with, but we've been on the long side, sticking with the long side. We haven't put on any shorts to really fight this. And at this point, I'm still sticking to that stance until I see reasons otherwise. So that's the S&P 500. IWM held a very critical level here. Thursday, again, very wide range day. If you guys remember, we talked about this. We were long IWM. We got long it here on Friday, enjoyed a nice day of gains, and that was about it. We saw almost an inside day on Wednesday, and then this session happened. So we ended up getting stopped out right basically break even. We were in at 139 and we got stopped out right around 139. So we're no longer in this trade right now. I do like the save here. Arguably could be long here at the close with a stop below these lows, and I think you have a nice, still well-defined risk to reward. I'm personally avoiding that for now, just waiting for this to pan out just a little bit. IWM again continues to be the weakest. Understand that. I do think again this is where rotation can happen, but it's taking its sweet time, and I just want to give it a little more room. So no longer in this trade, got stopped out of there for break even, but I do like the save here on Friday. This is going to be a very critical low now, 137.30. Really want to see it stay above 138, but it could use this as a bigger line in the sand. Don't want to see this fall back into this old range. Bulls certainly do not. If we go to the Qs, you can see, again, strong close here on Friday, not closing at the highs exactly like the S&P 500 did, but still holding up pretty well. It's had a tremendous run. Fast moving average has caught up with it a little bit. So, similar comments do apply here. It's overbought. We know that, but the trend is strong. We haven't seen enough selling pressure yet. So, it's best to stick with it, not overtrade it, and just wait for some more signs of sort of two-way trading to set in here for the Qs. With that, let's move into some of the other markets. TLT finishing the week strong, getting up to our upper sort of resistance area here where it's failed times before this. You can see up here back in November and in January, and then earlier in February, it struggled with this 123 level. If you go to the weekly time frame, you can kind of see why, right? It's been in a strong downtrend since September, October, as it started to break down. 20 period still down above price, 8 period now below price, but still you have an interesting situation there where you don't have trend alignment entirely on those two, or bullish alignment on those two fast moving averages on the weekly. So you do expect some overhead supply, but let's pay attention to this level here, slight uptick in volume. So TLT, bulls running with it in the short term. Go to GLD next, finishing the week pretty strong here. It resolved higher. We talked about this pattern on Wednesday, this little kind of inverted head and shoulders, whatever that was, breaking out above 118, and it got 2 days of follow through. Slight uptick in volume there as well. On Friday, and silver, same thing, continues to march higher, just above these fast-moving averages, and really starting to get back into these previous pivot highs here from November and September of 2016. So nice runs there in the metal. If we go to the oil market, continues to dance around here. It is, this USO again. We know that this isn't the cleanest chart here to plot oil, but if you look at the futures contract, you can see it's hanging up at the upper echelon of this range. We're going to see next week if the bulls can actually get that breakout, or if it does fail back and kind of move back into this old range and eventually roll over. Still yet to be seen. Tight consolidation, still watching it. UNG, talked about this one. Seeing an uptick in volume here the past 3 or 4 sessions, as certainly on Tuesday where it had this 9% move lower, but since then on these 3 little up days that we've seen, also getting an uptick in volume. So maybe getting near some type of bottom here in UNG, at least in the short term, or at least some sideways two-way trading to develop as these moving averages catch up. So pay attention to that there if you're interested in any of those mean reversion trades. UNG looks like that could fit the bill. And I think that's it for the major markets. Let's move into some sector analysis real quick. I mean, XLU just killing it this week, up 4% on the week. You can see igniting above this 49.25 level, so really getting a good amount of traction there. 7-month highs, I believe it is, and quickly, only $1 and $1.50 away from all-time highs. So XLU, a lot of momentum, a lot of steam there. Particularly interesting when rates didn't do a whole lot, or TLT was up, so rates dropped a little bit. I guess that does make sense. Got the Fed rate hike decision for March coming up, fast approaching. So XLU telling interesting story right now. XLV also off to the races today. Again, a little more the defensive side is what you see moving this week. XLP as well, up 1.5%. XLV up 1.5%. So these are a little bit more the defensive. Now you can't knock technology. Still finished up almost 1%, finishing the week strong. This has been an amazing trend. And you did have some nice comebacks late here on Friday. Industrials with another gap lower. So we had like a 3-day pull off highs, gap lower, closed strong. That looks good. Semiconductors also making a nice little comeback here on Friday with this gap lower, finishing near the highs. So these dip buyers, they're relentless here in semis right now. They're still holding above this 20 period, still maintaining this trend, and we're still continuing to move higher. Really, the downside just continues to be in isolation here. Energy, which everybody seems to be paying attention to at this point, up, down, 8, 9, whatever percent it is now off these highs, and you can see coming back and retesting the lows here from February the 8th, which did give a nice 3-point bounce here in the XLE Spider ETF. But now we did roll back over, maybe seeing a little bit of some signs of life here at the end of the day with this bounce higher. So I pay attention to that. Watch the oil market. If you're into mean reversion trades, maybe you have something setting up here in XLE. So might be some rotation there if if that's your strategy. So I think we're going to end the video there. I hope you guys had a great week trading. Hope you have a great weekend. Thanks again for watching as always, and I hope to talk to you again soon.